potential risk, but also potential opportunity, right? The buy on dips crowd has made a lot of money, but where do you make your move? Mark Newton will break it all down. Remember, he's got the charts, folks. He's going to give you a guideline of how and where you should be looking to take advantage next. Where do we buy? I want to bring in now Fundstrat Global Advisors Managing Director Mark Newton. Mark, so, listen, I mean, you get to this point where every day the NASDAQ is higher, propelled by the usual suspects. And I pulled this here, under the 50-day moving average, struggling here a little bit. The volume's not obscene, but when you look through your work, what stands out most to you here?
There's a couple of different things. There's sort of some bifurcation right now in technology. So it's not all of tech. It's only the software names that are really getting hit hard. So if you look at the Apples and the Teslas, a lot of parts of hardware and semis are holding up just fine. So, when you look, we really haven't broken down that materially yet in the NASDAQ.
Right.
And honestly, the broader market is holding up just fine. So it's really just been a tech-led short-term sell-off.
We hold here and start to turn up. Do you just wait for new highs to start buying? Would that be the buy signal?
Yeah, for those that are short-term, it might take some time. It has been a lot of damage within 6 days. But I do think we're very, very close, and it'll bottom by next week, honestly.
So sort of a consolidation for right now.
That's right, yeah.
All right, so same thing with tech, but even more pronounced, a little bit further below its 50-day moving average. I didn't put the volume in here. I'm not sure how important that is, but relative strength also. I mean, could we get a move where relative strength gets pulled back even lower?
I think it's premature only because the broader market has held up so well. So we've actually seen some increase in breadth in the last couple of weeks. People have been saying, oh, breadth's a problem. That has been the case since July. But a nice move in the broader market. The Dow actually made new all-time highs last week. So until we get under August lows, I don't think that's going to happen. The fact that gold, silver, crypto is moving up, I think this little pullback is going to prove short-lived.
We're talking about gold and silver specifically. Okay, now the stock in the moment. It's hard to see here. This looks like all the other charts, folks, except this was like 190 to 150. We're talking about a 20% pullback on a major name. Like in a matter of days, it blew through the gap. Often stocks fill a gap and go back up. None of that's happening. People start to get a little bit worried.
Yeah, true. Look, a lot of the AI and quantum-based stocks have had some real deterioration. So 19% decline in about 6 days, over 3% a day. What I would say is this: whenever you have a stock like Palantir, it's had a monthly RSI of right around 95.
Right.
The faster you go up, sometimes when they start to break, and of course we had the report from Citron, the faster you can come down in the short run. I don't mind buying at all. I like it at 142, and I think it's going to gradually start to stabilize and work its way higher. But a lot of damage has been done. That probably wouldn't be my top pick for the short term, but let it marinate a bit. It should be just fine heading into September.
And a name like that, if you're a buyer of it, you understand going in, and you should, that it's a high beta. It's the ultimate high beta name, so be prepared. Relative strength, I mean, equal weight always, comes into the conversation at these moments. Equal weight, having a pretty good couple days against the cap weighted. What do you see?
Well, that's the thing. Look, we have equal-weighted S&P, and you're actually making a minor breakout versus the S&P itself. So that says a couple things. One is that tech has lost a little momentum in the last month, and I still like tech, but it's important that the broader market is actually starting to play catch-up for the first time in months. So it's actually not a bad thing for the market to see the equal-weighted start to push higher. Some of it's been defensive, and I get that, but we're also seeing financials actually do okay, and industrials and discretionary. Great move out of discretionary. A lot of those entertainment stocks, the consumer is starting to come back. That's a good move for the market. So
all right, let's talk. You mentioned gold and silver earlier today. You like them both here.
I do. I like them a lot. I think both of them are actually bottoming today and should actually make a beeline towards the highs between now and October. So seasonally a great time. Today's move did make little minor breakouts in this short-term trend. Real rates continue to roll over. We know the Fed's got about 4 cuts between now and next summer. I love the metals. For those that are considering diversification outside of maybe their two top heavy in software, look at the precious metals. Gold, silver is not necessarily a precious metal, but still very important, and I like them both.
Good stuff. Thanks a lot, Mark. Appreciate it. All right.